We have a critically important update for all AMC stock investors. We need to get into what you need to know for tomorrow. My prediction for CPI, that is going to be your big catalyst. Let's just go ahead and jump into it. Tomorrow could start a, well, as I've been saying to personal friends and family, could open a floodgate of billions of dollars that could head into small and mid-cap stocks. This could be exciting for AMC stock. Hit the like button and subscribe to the channel. Let's go ahead and jump into it. Start with this. AMC stock was up 1.37% today. This was a pretty good day for AMC. Now, it could just be the start of something much, much larger, like way larger, okay? So this is by far the most important week of all of 2023, probably going to be the most important week for at least Q1 of 2024 as well. Now, things obviously develop, so I don't want to go too far out, but this is by far the most important period of time for our markets in a very long time. Think about it like this. The last time that we were set up this way was the beginning of 2022. Now, we were set up for failure in 2022. Let's be honest here. Hindsight's 2020. We can make all the excuses or the arguments we wanted. We thought inflation was going to fall a lot quicker than it did. That obviously did not happen. Why I'm referencing this time to this moment in time to the beginning of 2022 is fairly simple. So the Fed had shifted our expectations for 3 rate hikes, maybe 4 rate hikes in all of 2022. What happened is the markets, they kept saying, you're not going to raise rates, Fed. You're not going to do it. The Fed kept raising rates, kept forcing the markets to up the ante, if you will. And we were disaligned with the Fed for all of 2022. Well, in 2023, we've been more in alignment with the Fed. There's been a lot less uncertainty about what the Fed was going to do, where their ultimate goal was going to be, and what would, start to transpire. So in 2023, the markets have been able to rally a lot more, in my personal opinion, not necessarily because even the economy is holding up better than expectations, although that certainly does help. It's not because of, too much other things besides the Fed, and we have clarity here, right? Inflation falling, that's also a big key as well to 2023. But it's clear. The Fed is basically done at this point. Now, in September, we had the summary of economic projections. We talked about this in the last video, but I think it's very important. We're going to highlight this again. In June of 2023, so like 6 months ago, the Fed expected the Fed funds rate by the end of 2024 to be 4.6% and GDP was going to be 1.1%. In September, they expected the Fed funds rate will be 5.1% in 2024 and GDP will be around 1.5%. Now the markets are saying the Fed funds rate by the end of 2024 most likely will be between 4.25% and 4.5%. But it's close, between 4% and 4.25%. So right now, the markets are basically saying the Fed is going to cut more than what they said in September. If that's correct, if the Fed comes in with a Fed funds rate, even at 4.6%, that's pretty close to what markets are currently pricing in. That would be about 4 rate cuts, roughly. Technically 3, but you could almost call it 4. If the Fed comes in at, let's say, 4.4%, that could be signaling as many as 5 rate cuts in 2024. This would open up the floodgates of massive amounts of capital entering into our markets. Why? Because, again, it's one thing for the markets to price in 4 or 5 rate cuts. It's a total other thing if the Fed tells you they're going to cut rates 4 or 5 times. The Fed's usually wrong. Odds are we would get more rate cuts than that. But totally different ballparks. So what you're seeing on the day today is money is going into, for the most part, like your Dow names, right? Your Dow is up 0.33% today, doing the best. That's because you do see some hedges being placed on today. Think about it like this. If you are a hedge fund or institution that has to be invested in stocks fully at all times, well, to mitigate some of that risk, because tomorrow is going to be volatile, Wednesday is going to be volatile, whether good or bad, right? You could see downside volatility or upside volatility coming tomorrow and on Wednesday. But to mitigate some of that risk, who is going to do the best out of all of these indexes, the Dow, the S&P, the NASDAQ, the Russell 2000, if things go sideways coming on Tuesday and Wednesday, tomorrow and Wednesday? It's the Dow, right? The Dow 30 is really your stable companies. No matter what the Fed says, more or less interest rate cuts or maybe hikes, who knows at this point, who knows with this Fed, it's really not going to affect the Dow all too much. So the Dow is really seen as kind of this risk-off place to be right now. Now, the NASDAQ, the Russell, they're doing fine as well today, but not to the same degree as the Dow. So investors buying the Dow today is telling me there is some form of hedging that some investors want to do, and that makes a lot of sense. The VIX is also sitting at just very low levels at 12.64. So anything under like 20 is considered, pretty low. 20 is kind of high, but really anything like 15 is really low. So anything under that is like super, super low. The VIX right now is really low. And the VIX, if in case you guys don't know, is basically tracking the sentiment of S&P 500 contracts. So the more puts you have on the S&P 500, the higher the VIX is going to be. The more calls, the less the amount of puts on the S&P 500, the lower the VIX is going to be. So lower means just more of an overall bullish sentiment. Higher means there's more bears out there. So you are seeing the VIX going up today. So there is more bearish positions being entered into the S&P 500 today than bullish positions. By 2.27%, the VIX is moving higher. This is pretty typical. This is kind of a typical reaction before we get big data or a big event, because usually you don't want to go head first into an event like this unless you have a lot of confidence. Now, I have a lot of confidence in we're probably going to get a lower than expected inflation report tomorrow. We're probably going to get a Fed that is in line with market expectations. If not, I don't think they're going to be that far apart from the markets. Like, the worst possible outcome would be the Fed funds rate is projected by Fed members to be 5.1% again by the end of 2024. And that would show a big disalignment between the Fed and the markets. The Fed could crash the markets if they did that. I don't think they're going to be spot on with markets expectations, but I don't think they're going to be too far off as well. Not enough to give you, a panic out there on Wall Street. Now, as far as the CPI report coming tomorrow, that's likely to come in pretty light as well. CPI year over year and month over month for China for the month of November came in both negative 0.5%. This is an even steeper drop than you've seen in October. So, China's CPI coming in really bad doesn't mean ours is going to fall into deflation as well, but it certainly is a possibility. And if that does happen, that's one step closer to opening the floodgates of capital into our markets. Now, for the Russell 2000, the total market cap is about 2.23 trillion. It obviously fluctuates on a day-by-day basis, but AMC is going to get a certain amount of money that goes into IWM, the Russell. And I imagine you could see billions and billions and billions of dollars head into IWM if the Fed is really in alignment with the markets. This would be confirmation on a whole new degree. So instead of us trying to catch up to the Fed like we were in 2022, this could be a situation where the Fed is trying to catch up to the markets. Because let's be honest, Fed Jerome Powell, he doesn't have that long left in his tenure. I believe he has till 2026, I want to say. The last thing he wants is to be the guy that was late to inflation, that was late to cutting rates, that caused a severe recession, and everyone lost money in the markets for years and years and years. It's already been, 2 years since we've hit a new all-time high on the S&P 500. That's what most people use to track the markets. The damage has been done already. The reputation is already not the greatest. If they can actually pull off a soft landing, wow, that could be incredible. Now, Ross Gerber says the Fed should just go ahead and cut rates by at least 100 basis points next year, preferably in the first half. This will protect the economy while maintaining higher rates. The market is already there anyways. 10-year is at 4.26%. That's another good point to make. The 10-year down in the low fours also is, projecting rates will get cut as well quite a bit in 2024. So if Ross Gerber is correct, we can have a pretty dang bullish market coming Tuesday and on Wednesday. Let's go ahead and take a look at the Ortex data here. First things first, the option activity for AMC stock today. Looking impressive, guys. So the video that came out earlier, we covered all of these 3 trades. You've only had 4 trades today, so there's been 1 more trade since the last video, and it was a January 5th $7 call worth $72,000. So the break even on this is $7.72 per share. So that puts your total option activity today at 4 orders worth about $200,000 with a positive order value of 100%. The put call ratio as far as volume today at 0.18%, volume at 84.5% to the call side and 15.58% to the put side. So very strong day as far as the option activity in AMC stock. Now, if we take a look at some of the short interest numbers, you have a short interest percentage of free float at 9.9%, $135.67 million. Currently in short positions. Days to cover 0.92 days, 19.58 million shares that are currently sold short. Shares out on loan 10.53 million. Cost to borrow 1.14%. Utilization of 23.72% and a short score of 52.1 out of 100. So these numbers are obviously not impressive, but I think the short interest is likely hundreds and hundreds and hundreds of percents. And I do think when you start to get the floodgates of capital that will open later this week, I think clearly you're going to see money going into AMC stock as well, just because AMC is a part of the Russell 1000 and the Russell 2000 as well as the Russell 3000. So when this happens, when this money goes into small cap stocks, in which it will, in my personal opinion, I'm not a financial advisor, come to your own conclusions. That's very important. You come to your own conclusions. I could be totally wrong, right? That's a possibility. We could crash coming in the next couple of days. So I'm making strong statements here. And in all reality, I don't know what the Fed is going to say. I don't know the CPI report tomorrow. But if my thought process is correct, if my expectations are correct, this could send AMC stock up dramatically well into the $8, potential $9 ranges by the end of this week. Now, if you take a look at the Stocko Tracker data as well, we're going to take a look at the option chain also. You do have 17,000 calls currently in the money, 162,000 calls out the money. In the money puts at 16,605. Out the money puts at 86,443. So about equivalent amount of calls in the money compared to puts in the money. That's because AMC has recently fallen, and around that $7 strike, there's a lot of activity on both sides, so that does kind of skew the numbers a little bit. If you're looking at out the money puts compared to out the money calls, there's about 2 times as many calls compared to puts. So that is definitely looking better than not here on the day today. Now, if we take a look at the expectations for inflation coming out tomorrow, my expectations are pretty simple. I think 0.2% for core month over month, that's where we're going to come out. The estimate, the consensus is 0.3%. If we come in at 0.2%, that's great. We're not really improving too much. We're not getting worse. We're kind of around 2.4% annualized. That would be fine. That would be okay. If you come in at 0.1%, wow, you will see a face ripper rally tomorrow. Now, year over year core inflation is expected at 4%. If you come in at 3.8%, 3.7%, that's going to be great news. I think around 3.8% is pretty respectable, but still 4% is not too bad as well. Now, inflation month over month, the estimates actually just went lower today based on China's CPI numbers, but month over month headline inflation is only expected at 0%. Some forecasts have it at 0.1%. That doesn't even matter. Headline is done. Headline is dead at this point. So I don't think you have to worry about that at all. Now, inflation rate year over year, this is where I could see some upside as well for our markets. If this does break down into the twos, that could be great news. Last month, year over year inflation was 3.2%. We're expecting 3.1%. If you come in at 2.9 or 2.8%, which I do think is probably the most probable outcome, then yeah, you could see quite the rally in stocks. And then coming on Wednesday, you're obviously going to get PPI month over month. That's expected at positive 0.1%. Don't be surprised if that is negative. That comes out 8:30 in the morning on Wednesday. I should also point out the data tomorrow comes out at 8:30 in the morning as well. Now, you are going to get the Fed at 2 p.m. on Wednesday, and then 2:30 p.m. the Fed press conference, and that's going to be big. But really, the summary of economic projections, this right here, 1 year, 2 year, 3 year interest rate projections, that is what is going to be critically important for stocks, really, for the rest of this year and at least Q1 of 2024. As long as inflation comes down, I see no reason why the Fed is going to deviate from what the markets are currently pricing in. Now, as far as the day-to-day 10-year Treasury yields, basically flat, so that's good news. It would be really bad if you were seeing a rise in 10-year Treasury yields heading into CPI. That makes me a little bit more bullish on maybe what that CPI number is going to be coming out tomorrow. AMC stock performing well into the end of the day here in after hours as well. AMC stock is $7.07, up about 2% on the day-to-day. Now, if we look at the volume for option activity today, you can see total call volume at 97,000, total put volume at 34,000. So 3 times as many calls being bought compared to the puts. Now, if you take a look at the option chain itself for this week, lots of option activity at the 750 call and a lot of option activity at the $8 call. At the 750 call, you have 13,000 for open interest, and at the $8 call, you have 20,000 for open interest, 10,000 and 10,000 a piece for open interest at the 850 and the $9 call. At the $7 put, you have 10,000, almost 11,000 for open interest, 11,000 for open interest at the 650 put, and at the $6 put, you have about 20,000 for open interest. So a lot of option activity on both sides, just out of the money. That's another reason why I think we will get a large move by the end of this week. Guys, that is going to go ahead and do it for this video. Hit that like button and subscribe to the channel if you guys have not done so already. Thank you for watching. Let me know what you guys think about all of this information down below in the comments section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.